Monster.com, 4.5 stars, best online broker, 2 years running according to Barron's, TradeMonster.com.
Welcome, this is your Option Monster Volatility Sonar Report. It's Friday here on the CBOE and we are having a big rally in the market ahead of the Euro Summit. The option trading's been very interesting so far. It's been pretty high volume for a Friday. S&P 500 up over 20 points, VIX cash down $3, and we're seeing two different plays so far in the VIX. Now, ahead of the possible big news out of Europe, we're seeing a lot of buyers of front month upside. So even as the VIX creeps lower, the big buyer is coming in on the November 37.5 line. They've bought about 11,000 so far. They paid $215, they paid $210, and they're buying that upside. That buyer is looking for an explosive move over the next few weeks in November to really be advantaged by owning upside premium. The opposite play we're seeing on the downside, perhaps looking for a resolution out of Europe over the next several weeks. This customer is coming in and buying the December 29, 25 put 1x2. Now they're buying one of the 29s, they're selling two of the 25s to finance it, laying out 55 cents for this spread. Now, if the market does take another sharp turn downwards, if the VIX moves up, they can only lose the 55 cents they pay. On the downside, they can start losing again below 21 even, and that put is trading in the 35 cents range. So if the customer wanted to turn that into a butterfly, they'd need to pay an additional 35-40 cents to cap their losses on the downside. But the strategy has a maximum gain of $3.45 after their outlay of 55 in premium, around 25. So the customer is really making a bet that the markets will calm down, the VIX will ease into the mid-20s, and they could hopefully turn a profit on the strategy. It's an interesting play there on the downside, especially when you look at what upside buyers are willing to pay for the 37.5 calls in November. This is Jamie Tyrrell with Group 1 Option Monster.